So I think we should be live right now. So just want to apologize for the delays. We both kind of had some technical issues, but worked through it, and that's what matters. So I'm here with Q Makes It Happen, and you can just give kind of a brief introduction, however you want, and we'll go from there.
Okay, well, what's going on? I'm Q. Q Childs is my real name, but I go by Q Makes It Happen everywhere else online. And what that simply means is me being Q, I make whatever I'm trying to do happen. I come from a crazy upbringing, and my financial story was nothing like I can't even explain it. Like I knew nothing about nothing finance wise, and then I decided to make a change one day and learn as much as I could. So 6 years later, I've paid off $33,000 worth of debt. I just purchased a home, and I'm increasing my income like exponentially as well as my net worth year over year. So that's the gist of my story. I'm from Chicago, 33 years old, got 2 kids, one wife, and a pretty border collie, man. Hopefully she stays quiet for this interview.
All right, cool. So yeah, I've seen some of your videos, and I guess if you could talk through a little bit of where you kind of got started with being, I guess, more interested in your personal finance, and um, just like where that started and where that passion came from.
I see what you're saying. So the passion came 2 years after I started, but I first started to kind of get interested, I would say. So the interest started in 2016. So in a nutshell, it started by my girlfriend yelling at me. Whenever I tell people that, they get confused, like, that's how I started. Like, what do you mean? Like, yeah, I was 25, I think 26 maybe at the time. And me and my then girlfriend, now wife, at that time, we decided to both move out of our parents' house and get an apartment together. So we got an apartment together. We thought we were adults. We thought we were grown. And I was broke. I was only making $18,000 per year. My wages was being garnished because I had defaulted on my student loans. And the very first 2 months, so month one, I came up $300 short on the rent. She was like, "Don't worry about it. Give me when you can." I said, "I got you." The second month, I came up short again, and she wasn't having it, bro. She said, "Dude, you say you got me after being short the first one. You come up short again." She went crazy. She told me about myself, and I appreciate her for it because she was right. So that made me step it up. So I picked up a second job. I started doing research on how to get out of debt, how to increase my credit, improve my credit. And from there, it's a rabbit hole. Like this whole finance thing is really complex, right? From personal finance, then you find yourself learning about investing and everything else. So it's just been a journey and a constant learning process, and I'm still learning every day. But 2016 is when it started for me, for real.
So what were your like goals at that time? Was it just kind of to, be able to make ends meet and actually like have some positive cash flow, or did it like take a while to have sort of like a bigger picture of what you
Um,
were wanting?
yeah, it took a while, honestly. Like initially, I had just wanted to, meet my end of the deal. Ultimately, like I wanted to have enough money to pay all my bills, right? Because there was a point in time when I had to have my cell phone cut off every month, or I had to make payment arrangements and late payment. It was always something that was going. Like I would either go without gas or go without food. I had to go without something every single month. And for one, I got tired of that. And for two, I got tired of not meeting my girlfriend in the middle, like I said I would, right? Not keeping my word as a man. That's not cool to me. And another reason was just to be able to do a little bit more than I was able to. Like back then, I was only able to maybe go out once per week or eat out once per week, and I just felt real restricted. So that was another reason I wanted to level up. And from after year two, I would say that's when I was just like, it turned into something different. And I was like, okay, now I want to do better because I see the compounding effect of not only my efforts, but the compounding effect of putting my money to use. And it's just, something that just compounds on each other. Like every step you take, every move you make, you notice things getting better over time. So it's like, man, just might as well just keep it going. So in 2019, that's when I started learning about investing and learning about other ways to flip my money and things that I can invest in order to just, just run the bag up completely, man. And 2020 was when I completely became debt free. And after 2020, things just exploded. So without me having to pay back all those student loans anymore, that put a lot more extra money in my pocket. So it's just it's a interesting dynamic, man, and it's hard to explain unless you experience it. But you know what I'm talking about.
Yeah, I think I understand what you're saying.
Yeah.
So you got more into investing, and what kind of, I guess, what's your investing style? What do you mostly invest in, or how do you make those decisions?
So that started. I ain't gonna lie, I fumbled through that just like anything else. Like when I made
Yeah,
my very first budget at 27, I didn't know what I was doing. I was just writing stuff down. I tried a bunch of different budgeting ideas, and until I found the one that worked for me, that worked best with my personality, that was easy for me to do and use. The same with investing. I started educating myself on investing back in 2019, and then that all started with, because I stumbled across, which I didn't mention earlier, I stumbled across Dave Ramsey initially when I was trying to get my finances in order. And he would always talk about investing, but he keep it really simple. And it was over my head because I was only tuned into him for the personal finance, pay off debt, no credit card aspect. But he would mention the S&P 500 and mention all these money market accounts and just index funds, etc. But that went in one ear and out the other. But I was still like retaining it, I guess, subconsciously. And then, of course, I stumbled across J.L. Collins, which I suggest anybody check him out. He has a book called The Simple Path to Wealth. So J.L. Collins is really similar in regards to Dave Ramsey on the investment side, which is keep it simple, keep it really, really simple. Don't try to stock pick. Don't try to time the market. Invest in index funds and dollar cost average or consistently invest over time. And 9 times out of 10, you'll become a millionaire by doing it if you put enough in and if you do it for a longer period of time. So I tried the stock picking thing and it didn't work. It didn't work, man. So it's like he was right. You know how you want to try something just to see, like you want to touch the
yeah,
stove
yeah,
just to see if it's,
yeah,
you like, damn, these millionaires are telling me don't try to time the market, don't pick stocks, you're gonna lose money, and to just invest in index funds. And I'm like, yeah, right. Let me let me see for
yeah,
myself type things. I went and checked it out. And I learned my lesson quick. But now I simply keep it super simple, man. I find the best tax advantaged accounts, and I just choose my favorite index fund and just pour as many shares in there as I can, man. But um, if I can go back just a little bit, I actually started investing back in 2011 and I didn't realize I was investing at the time. So that's a crazy aspect in itself because you don't know what you don't know, right? It's you're ignorant until you realize what you're doing. So we've all heard of a 401k. A lot of people know what a 401k is, and that's what I had. I would hear this term all the time. You know, son, you should invest in your 401k. Everybody at my job, are you going to the 401k meeting? They're doing enrollments. You should go up there and check it out. I'm 22 years old at the time. I'm not thinking about no 401k. I'm just like, what is everybody talking about? So if enough people tell you to go do something, you damn near gonna do it, especially at 22. So you're just taking all their advice. And I went up to the meeting, and sure enough, I got the breakdown and the gist of what it was and how important it was and all the advantages of it. So I ended up investing in it. And as I mentioned, I don't even think I did mention this, but at the time I didn't have a bank account. So that was another like disadvantage I had, because in the past I was so trash with money that I used to overdraft a lot. I was with Chase, well, Washington Mutual, which was bought out by Chase in 2008, but I was with them and I just couldn't maintain my accounts right. So they ended up closing my account. I didn't have a bank account from 2008 all the way through 2016. So I went I went 8 years with no bank account. And so I opened a 401k simply for the fact that I wanted to save a little bit more money, and I wanted to have a place to house my money so that I could have that degree of separation. So you want to have like somewhere to put your money other than having it in your pocket, because if you know yourself, I knew myself, I was going to blow it. I was going to cash those checks and I was going to spend it all. So I'm like, let me open this 401k and treat it like a savings account, not realizing like its full potential. So I started off with 15%. I was putting 15% of my paycheck each week into a 401k through my employer, and it would just come out automatically every week and just, do its thing. I didn't look at it. I never opened it. I didn't know who the fund managers were. I didn't know what the management fees were. I didn't know anything about it other than grown people are telling me to invest in it, so I should invest in it. And from 2011 all the way through 2016, I was just putting 15%, and then I started chopping it down because I'm like, 15% is a lot. I'm starting to feel it in my paycheck. So let me cut it down to 10%. Okay, 10% is a lot. Now let me get some of that back. Chopped it down to 5% and then 2%. And ultimately I started not contributing at all, because Dave Ramsey would say, cut off your retirements. If you're trying to pay off debt, stop contributing to your retirement fund right now. Use that extra money to pay off debt. And I listened to him like a goofy, because I'm just listening to everybody, because you're thinking, okay, he's a millionaire. He's helped millions of people progress financially. Let me take his advice. And it's sound advice, but it's not advice for everybody. It's not sound advice for everybody, but hopefully that makes sense, man. Am I making sense over here? I'm sorry. I'm
Yeah,
just
yeah.
just rambling, man. I'm having flashbacks. It's crazy.
No, it's great. So I guess it sounds like you don't really think that was the best move to stop contributing,
I don't.
or
I
okay.
don't like, and now I can't contribute if I wanted to, because it's with a previous employer. Like I have a whole different job now, and I contributed for about a year, I would say. So from the time I started to the time I stopped, I only contributed about $3,000, which is significant. But when I stopped until now, that $3,000 has turned into $16,000, and I couldn't tell you how other than compound interest. So it's just eye opening, man, and it lets you know where like the real power lies when it comes to investing. I never opened
Yeah.
that account. I opened it. I had them take the money, put it in there automatically. 2011 to 2020, 2019, and 8 years. It's been 8 years before I even looked in there. It was just in the background the whole time, just running, like set it and forget it. I damn near forgot about it a couple times, because a lot of life happened in that 8 year time frame. And it's just now I don't touch it. I don't contribute to it. It's there if I need it. If I want to roll it over, I can. But it's just good that I did do that. So it turned out that it was like the coolest mistake, like most mindless thing I ever did. It's like, dude, you didn't know what you were doing, but it worked out in your favor.
Yeah, that's good to hear, I guess. Um, so I guess what are your what are your goals now, you would say? Do you have any like specific goals or
Man, I got a lot of goals, honestly. I got a lot of goals. So the list is long, but I'll try to summarize it a little bit. But as far as investing in general, um I'm gonna continue to invest in the stock market like forever, as long as I can. But I'm also gonna be investing in real estate, because between those two, those things make the most millionaires in this country anyway, especially real estate. Like most millionaires and billionaires own real estate, they own stocks, and they own a business. But I have to own all three. So that's my goal. Like I have the stocks on lock. I got the investment accounts that I need. I have the investment plan put in place. I can go into that a little bit more, like my overall investment strategy. So it's super simple. If anyone's familiar with the Roth, I'm sure you're familiar with the Roth IRA. That's one of my favorite investment vehicles, hands down. And my thing is, when I learned about that, I wasn't in a position to even invest money into it. I was still knee deep in my debt payoff journey. And I was like, man, whenever I get to this, I could have invested ahead of time, but I didn't know that because, again, I'm listening to Dave Ramsey. He's saying, don't start investing until you pay off debt. And I'm like, Jesus Christ, man. Like, but this thing is on sale and you see things and hear other information and advice, but you're trying to stay true to what Mr. Ramsey told you. And it's just, I kick myself sometimes, but I waited until I can't like became completely debt free. I waited until I had a fully funded emergency fund before I started investing in my Roth IRA, which is not a bad thing, of course, but I maxed that out in 2019, 2020, no, 2020, 2021, and I'm well on my way to maxing it out for 2022. So with the Roth, it's a $6,000 maximum contribution, and within that Roth IRA, it's a tax advantaged account ultimately. So you pay taxes up front, and on the back end, you don't pay taxes. That's like a simple breakdown of it. But a Roth is nothing but an account, and a lot of people aren't aware that it's no difference than like a checking account or a savings account. Like the Roth itself is the shell, but within that Roth, you have to make investments. You have to
Yeah.
contribute. You have to contribute the money, and then you have to invest the money once it's in the account. So it's like a two-step thing, and a lot of people make the mistake by just making the contributions and thinking they invested something. Like, you didn't invest nothing. You just put the money in the money market account inside the
Yeah,
Roth.
you just
And
moved your money from one place to another place.
yeah, exactly. And it's just that was a mistake that I never made, which I'm grateful because I've heard horror stories of people who actually made that mistake. And I'm like, man, I've done so much research over the years. Like, I used to eat, sleep, and breathe YouTube, Google, books. I don't know if you can see my books in the background here, but I got some crazy books. Man, my library is nuts. I listen to audiobooks all the time. I listen to podcasts all the time. I talk to people who are more knowledgeable in this space and who are going the direction I'm trying to go or coming back from where I'm trying to go. And that's literally all I do, man. I continue my education and just continue to find ways to exponentially grow my net worth, man, because the compounding effect is real. It's really real.
Yeah. Honestly, like just in all aspects of my life, that's like one of the things that I feel is most helpful is just talking to people that are more knowledgeable than you in a certain subject. And like, I don't know, you can just get so much information because sometimes you'll ask a question and then they'll answer like a question that's even more important that you didn't even think to ask that question.
Yeah, that's true. And that's why I'm saying
And
sometimes you don't even have to talk. You might have to say one thing, but if you're
yeah,
just you
exactly.
could be a fly on the wall in a room. Like, you can mess around and be in a board meeting somewhere where you like and you're hearing these people talking, you're just sitting there like, what did he just say? Oh, okay. Then you taking notes. But this is something I tell my daughter all the time. And I have a 2-year-old daughter, and she's so lit, man. She's sharp with her finances already. I take her to the bank with me. She came to every showing that I had before I bought my new house. And I'm trying to get her as educated as early as possible because it took me a long time. Like, I still got educated early, but I was lost for a minute because my parents only knew what they knew and they didn't teach me as much. But I tell her all the time, when you listen, you get what you want. And when you don't listen, you don't. And it's deep and profound. And she won't get it for a while, I understand, but she's always asking me for something. But I ask her for something in return. When she don't do what I tell her to do, right? When she don't listen, she don't get what she want. But when she listens, she gets what she want. And whether it's something tangible that she gets, or whether it's some information that she gets by just listening, it could take her very, very, very far in life. Uh-oh, we lost Frank, y'all. Frank, you still there? I lost you, man. We can keep it rolling though. There go the books I was telling y'all about. That's just a few of them. That's just a few. I have a real deep library. What is that? 1, 2, 3, 4, 5. Yeah, that's just a few, and those are the essentials. That's why I keep them right there on display, because that's pretty much all you need. You don't need much. I feel like people overcomplicate things a lot, and they get in their own way in terms of not only personal finance but investing and a lot of other things in life. Man, Frank just disappeared on me. You
Uh, my
you got kicked.
Wi-Fi just cut out for some reason. I don't know.
No, it's all good,
Sometimes
man.
it's a little annoying.
It's all good. I talk to myself all the time.
That's fine.
No, what where were we, man? I've had this issue happen before too, so it's no big deal.
Uh, Honestly, I forget. I think you were talking about your.
Oh, we were
I'm not
talking
sure.
about just listening to other people who are more
Oh yeah,
knowledgeable
yeah,
than you and getting information. And I tell my daughter, when you listen, you get what you want. When you don't listen, you don't. And it's a multi-layered phrase. Like I said, I know she won't get it, but like when I tell her to do something and she wants something, if she listens, she get what she wants. But also, it doesn't have to be a tangible thing. Like if you listen, you might be in search of some information. So if you listen, you get what you want. Sometimes you don't even have to open your mouth. Like God gave us two ears and one mouth so we can listen more than we speak. I tell people all the time, sometimes you just gotta shut up. Like you just gotta sit there, take the information in, because people will tell you what you want to know, and whether they do it intentionally or not, it doesn't matter, man. Just
yeah,
conversations like this, candid conversations, open and honest conversations. If you just listen, take the information in, sometimes you could just, eat the meat and spit out the bones, because people will say, well, who cares what he has to say, or I don't want to hear about what he has to say. But it's like, okay. I may not like the person, but if they spitting game, if they got gems, if they got something that I can learn from them from, it doesn't matter how I feel about them. I'm just going to take what I
yeah,
need and leave the rest behind, and it is what it is.
yeah. So I guess one thing that I think will be interesting to hear about is sort of, I guess your um, like specific like strategy for investing. So do you like dollar cost average like on a monthly basis? Do you have kind of like a schedule,
Ah.
or like how are you like deciding what to do?
Oh yeah, great question, man. I think we led there and I strayed off. But yeah,
Yeah,
it's
that's
super
fine.
simple. Like I mentioned, I love the book The Simple Path to Wealth by J.L. Collins, and he say the same thing. If people would just consistently invest in index funds over an extended period of time, more than likely they'll become a millionaire, but they'll become financially independent, financially free, whatever. But people just refuse to do that because it's so boring. If you overcomplicate things as a human being for whatever reason, you feel like, man, it should be something else. There's got to be something else to it. I don't know if he's telling me the right thing or not, but that's true. That's my simple strategy. I literally invest in index funds every single month, regardless if the market is up, regardless if the market is down. um that's technically a form of dollar cost averaging, but I just put what I can, right? There's no specific set amount each month. So this month I was able to invest $700 into my Roth IRA. Last month I was able to invest 1,000. The month before that I was able to invest 500. That's all I had. That's all I invested. Keep it simple and keep it moving. And what I purchased within my Roth is VTI. So the Vanguard Total Stock Market Index Fund, and it's the ETF version, because the actual index fund, if I'm recalling correctly, is VTSAX, and that's through the actual Vanguard platform. So
Yeah,
I invest solely through, well, not even solely, but I invest mostly through Fidelity. So Fidelity is my go-to investment hub, and within the Fidelity ecosystem, I purchase Vanguard products. So Vanguard ETFs, which is VTI, and I also purchase VYM, which is the Vanguard high yield dividend ETF. And I just offset those, right? VTI, that's pretty much all anyone even needs, but I like
Yeah.
to try my own strategy with the high dividend because I'm big on passive income, man. Like, yes, the growth and the equity is nice, but I like seeing that cash flow. It doesn't have to be exponential right now, but the little bit of cash flow I get every quarter from them, it lets me know, like, okay, you're on the right track. I recently just got a dividend payment from VYM that was about 18 bucks, just shy of $18. And that was off of, I think I got 22 shares of VYM, and then the rest is VTI. So you'll have 80/20. I'm not sure if you're familiar with the 80/20 rule. Most people would say if you're investing, put 80% of your money into like index funds and annuities, and then put the other 20% in bonds for like securities and stuff like that. But I'm too young, man. I'm too young for bonds. I feel like
Yeah.
bonds is for old people, man. Bonds is for people who are climbing down the mountain. Like, you done already went up the hill, you reached the peak, now you're coming down from retirement, you over the hill and you're going down. So you start adding bonds to your portfolio. So I'm not at that point yet. I'm not there, man. I'm, like I said, I'm 33 and I'm being as aggressive as I can right now. So the more money I could pour in there, the better, because over time that money will grow. And like I said, it don't matter if the stock market is down, which it is down right now. It is technically a bear market. And I picked up so much VTI. I picked up so much VTI over the last, I would say, 2 weeks, almost 3 weeks. I was getting VTI at 2020 pandemic prices here in 2022. And
Yeah.
it's basically averaging down, man, and trying to lower that cost basis and just ride it back up, because it will go back up. There's a cyclical nature to the stock market that if people pay attention to it, it'll relieve a lot more stress, because people tend to freak out when the market dips or when the market tanks and when the market goes down, and they see the red days and all the blood in the streets and they see all the news articles. It scares the pants off a lot of people, but it only scares people who aren't educated. So I highly recommend people get educated and stay educated. And once you get the education, it's hard to lose it. It took me a few years of studying and mentorship, book reading, podcasts, like I said, but I got the knowledge now and it is with me for life. Like, I can turn it on and turn it off as long as I got money, as long as I have an investment account. It's basically impossible for me to not be a millionaire. So I tell people all the time that I'm a millionaire. You're looking at a millionaire, you're talking to a millionaire, and they get confused. I'd be like, it's not confusing to me. Like, I don't look like the stereotypical millionaire, right? I don't have a Mercedes Benz. I'm not wearing a Rolex. Like, I don't, you know, but I'm just me. I'm like the millionaire next door or the everyday millionaire. Like, I drive a 2016 Sonata because cars are liability. I don't care about cars. I don't even know what brand of hoodie this is. Like, I don't care about clothes, so I don't overconsume. I spend most of my money on assets, bro. Asset accumulation, that's the vibe for me all day long.
Yeah. What I thought you said was really interesting about being like people being educated is like when you said that, that's pretty much exactly what I was thinking, is that generally, when the markets go down, people are, scared and worried about things. And at least my perception, I guess, is a lot of that is just like they're not knowledgeable about what they're investing in, and therefore they don't have like the confidence to know that what they're investing in is going to be perfectly fine.
Oh,
Um,
we talk that talk, Frank. I hear you. I hear you, man.
and
Hey, that's a bar and that's a fact, and you didn't tell no lies right there. Because during the pandemic, I forget the exact statistic, but ultimately more investors came into the market than ever before because people looked at the stock market as just a way to make some quick money. They looked at it
Yeah.
like a casino almost, especially with Robinhood and all these other things. They're just like, man, I heard there's money to be made in the stock market. Let me go check that out. Just your random everyday Joes, like they didn't do no research, didn't do no due diligence. They just opened an account and started putting money in there and just picking random stocks. And it's like, dude, it do not work like that. You can try your luck. Did some people get lucky? Yeah, a lot of people got lucky. A lot of people hit it big just on pure randomness, just speculative gambling. And I'm like, okay, good for you, but it's gonna be hard to maintain that money because once you blow it, you ain't gonna know how you got it back because you don't know what it takes to get there. You just rolled the dice and came up. But that education is important because, like I said, once you get it, you can't lose it. Like it's with you forever. And as long as you have an investment account and money to put into that investment account, it's like an infinite money glitch, man. It's up from there at all times.
Yeah. Yeah. And one of the things I I really I guess agree with you in what you said about dividends and like liking that I guess cash flow and passive income. One of the things I guess I was made aware of recently is sort of like the taxes side of that. So you said
Oh no. Oh no. We done lost the Frank again, man. You know what? It is what it is. He'll be back. He'll be back. And we'll edit this thing up, I'm sure. If you're live watching this, shout out to you, man. I appreciate y'all checking in, man. Frank is a cool dude. This is our first time talking to one another verbally. Frank reached out to me through YouTube, through Instagram, and we've been in communication for I want to say over a year or so now. And the fact that we're on here talking, I'm actually excited and pleased to be here. So hopefully y'all can learn something from what our conversation has to offer. Like I said, I don't know everything about everything, but I know what I know, and the things that I do know are the things that are working for me and the things that I know for a fact can help somebody else if they decide to take the information and run with it. People say knowledge is power, and it is to a degree, but I like to put my own spin on it and say applied knowledge is power. You can have all the knowledge in the world, but if you don't apply that knowledge and put it to use, what are you doing? It's nothing. It does nothing at that point. So you got to apply it. You must apply it. Like application is key. Application is key. And I learned that the hard way too, because I was just learning at one point, just learning and learning and studying and analyzing. And it's that whole analysis paralysis thing you hear about. And you know, paralysis by analysis, however you put it. But you study so much to a point where you're just you're just a consumption junkie for information, but you don't do nothing with it. You just hoard it and stash it in your mind, and it's just more and more time goes by. And yeah, we don't want that, man. We don't want that over here, man. I know Frank putting the word, like he putting the game to use. I know Frank is over there putting the game to good use, man. So hopefully y'all do the same thing. This is funny, man. I feel like a talk show host. I got the new mic right here, and I'm just here by myself. It's weird, man. Frank keeps getting dropped out. He keeps getting dropped out, but that's what happens. That's what happens on the internet. Shaky Wi-Fi happens from time to time. You know, same thing with the stock market. Sometimes it gets a little volatile. You know what I'm saying? Sometimes there's a little blood in the street. Sometimes there's a little panic in the markets, and that's perfectly fine. Perfectly fine. Staying say having issues. Oh man. Anyway, let's see. I'm about to put something in the chat. I don't know if anybody's in here or not. Oh man. Oh, Frank got the wrench. Got the wrench on the chat. All right now. Oh man, Blue Collar Bill. I appreciate you, man. I appreciate you for listening. I just text Frank. I just text Frank right now. He's saying he's sorry for his camera cutting out, and I was just saying how I can keep the show going for him, or if he wanted to just wrap it up and do a part 2 or something. But I'm thoroughly enjoying this conversation, man. How you feeling? How you feeling about it? It goes so deep, man. If I'm all over the place, I apologize, because I can talk this finance, personal finance, economics, micro, macro investing. I can talk this stuff all day because I have a true, passion for it. And once I learned the power of it, and once I learned that I don't have to work 65 years, 75 years, I can retire. Or that retirement is not an age, but a dollar amount. Once I learned all of these things, it forced me to not only push myself to get there, but to also educate other people on the possibilities. Because again, a lot of people don't believe this stuff is true, but it is. I tell people that I'm a millionaire. I tell people that I'm going to retire by the age of 42. And all of that sounds like, it sounds like rah-rah. But the whole time, with my strategy and with the things that I'm using, I always let it be known, like, it's a possibility. It's not even a probability. It's a possibility and a probability. So the more you know, like we were just talking about education, right, Frank?
Yeah.
I know you like, man, this thing keeps kicking me out. Blue Collar Bill
Yeah.
just checked in, man. So I had the show rolling while you were gone, man. I was trying to
Yeah. Thank you so much.
yeah, I don't know who this spam in the chat, but Blue Collar Bill
Yeah.
is the real one, man. And
Yeah.
so me and him going back and forth. But again, yeah, I'm just
Yeah. I'm sorry. I don't know. Like sometimes my camera just like doesn't want to show up. Like when I don't
hey
know.
man, it's a case of the Wednesdays. I don't know what's going on. I was just
Yeah.
saying how like your camera is acting like the stock market right now. The thing that thing volatile.
Yeah.
It's some volatility going on, man. It's no
Yeah.
big deal.
But I think what I was talking about was like taxes with the dividends.
Oh yeah.
Um,
Oh yeah.
so I was gonna ask you like if you invest, you have like investments outside of the Roth IRA, or is it mostly just the Roth IRA?
I do, and
Okay.
thank you for bringing me back to the center. I keep doing this, man. I don't know why I keep doing this, but yeah, my investment strategy, I'm gonna keep it real simple, is really, really simple. Roth IRA, individual brokerage account, real estate. And within my Roth IRA, I just buy VTI and VYM. But this year, I'm putting 100% VTI. So once I max out my Roth, then I'll move over and decide if I want to continue my stock market investing in my individual brokerage account, or if I want to do the real estate side, because the real estate market is super high right now. And I'm not trying to buy at all time highs, although I do know how to buy. Like with real estate and with any other equity, right? You make your money when you buy. Like your entry price, it doesn't matter the most, but it matters a lot. So that's it, man. Within my individual brokerage account, that's when I buy all my like Apple shares, or I'll buy my dividend REITs. So if you're familiar with Realty Income. I got about 4 different companies in my matter of fact, I can pull it up right now. I got about 4 different companies within my individual brokerage account. And that's the same thing. I keep it really, really simple, right? I don't overcomplicate it because once things get overcomplicated, it's just a mess. You ain't gonna make no money. You're actually gonna lose a lot of money. So I know people who got about 50 different stocks in their portfolio. I'm like, dude, how do you do diligence? Like, how do you do due diligence on 50 companies? Like, ain't no way. Ain't
Yeah,
no way. And you
yeah.
just started investing?
I saw someone on Twitter the other day. They like posted a link to their spreadsheet and were like, "This is 250 dividend stocks I'm investing in. What do you guys think?" I was
Boy,
like, "Holy cow!" And I said, "That's like a lot." Uh,
yeah. And I mean,
like
unless you look at,
those are pretty decent companies, but I think that's way too many. And the person
yeah, and
replied, and they're like, "Yeah, well, that's what you do with an ETF." And I'm like, "Well, yeah. So why aren't you just investing in an ETF?"
yeah, exactly. He made a homemade ETF. That's another thing too that's good insight. I'm glad you brought that up because within an ETF, there's thousands of companies and a lot. Unless you pick like a S&P 500 ETF where there's 500, right? You have what is that? VOO, I think. VOO
Yeah.
is the S&P 500 ETF, and then you have the I can't even think of it right now. It's the one that a lot of day traders trade with this one, but it's nothing but the S&P from another branch. But
Oh, SPY.
SPY, yep.
Yeah.
That's come on, Frank, man. I knew you would know. I knew you know. I said, yeah, all the day traders are trading this, all the options traders are all the options traders are trading SPY on a daily. And
Yeah.
I don't fool around with options either. Like I do some swing trades from time to time, like when I'm really bored, but I just keep it simple, man. My individual brokerage account, I have, let's see how many investments I got total. One, I got three. I got three companies inside of my individual brokerage account, and I don't plan on getting any different ones. Like I had a couple other ones that I sold while they were at their high to just pour back into other investments while they were at their low. So I rebalanced my portfolio recently, but I have Apple, I have Realty Income, and I have Stag. So Apple is Apple. That's self-explanatory. They got a $2 trillion market cap, if I'm not mistaken. I bought my first MacBook ever in life, spent 1,300 on it. I bought my first iPhone ever in life, spent about 1,300 on an iPhone. This the 13 Pro, 13 Pro Max, and people consume Apple on a daily basis, bro, but refuse to buy the stocks. I'd be like, dude,
Yeah.
like by you being a consumer of that, like you're making me rich. Not only are you making Tim Cook, who's the CEO of Apple, rich, and Steve Jobs, he's up in heaven making eating for life. But it's just odd to me, man. And Apple has a great product. Don't get me wrong. So I'll never tell anyone not to consume it, but just pay attention because they keep rolling out products. This MacBook just came out and they already have a newer version of it. I just bought it brand new last year, and here we go. We got the new M2 chip. And like, wait,
Yeah.
what? I just got this. Like, why you upgrading on me already? They try to force you to just eat their products a lot, like literally like apples. And it's funny, man, but they got the consumers on lock. And the beautiful thing about Apple is they have one of the best moats out of any other company, right? So their competitive edge, once you get inside the Apple ecosystem, it's hard to break free. So my
Yeah.
wife is an Apple addict, and we laugh about it because I tell her she didn't realize she was until I'm like, I bought her an Apple Watch for her birthday a couple years ago, but she's got 4 MacBooks, bro. 4 in this house right now. She has 4. She beat them up because she uses her computers a lot for work. So she beat them up and then she go get another one. She has 4 MacBooks, about 5 iPads. She's got an Apple Watch. She's got every Apple product. And I'm like, man, you're an Apple addict. You don't really like, you don't realize this. Like, you subconsciously addicted to these products, and I get it. They're just that good. They're undeniable. So
Yeah,
again, and then you got the Apple versus Samsung feud, where it's like people
yeah,
who are Apple lovers, they're diehard Apple lovers. Like, it's once they get you, they got you, man. And I'm in there.
yeah,
I'm in there now with the MacBook and the phone. So
yeah. I saw something interesting recently. Like AirPods alone is like $23 billion of revenue
yes,
every year
yes.
for
I
Apple.
did. Hell, man,
That's
Jesus.
like that's like so much. That's more revenue than the vast majority of companies make. You know?
Yeah, just off the low, and then people lose them all the time. They spend
Yeah,
200 and they spend $200 on these things. They lose them, then go buy another pair. Like, at some point, it can't be that serious. Like, you can go to the gas
yeah,
station and get some knockoffs, or go on Amazon and get like a $20 pair or a cheaper pair. Like, you don't have to get the AirPods. It's not that deep. Like, a headphone is a headphone. But it's not like that to some people. Like, no, I need the real thing. I need the real Apple product. If it ain't real, then it's just consumerism, and it's sickening, man. And I used to consume, overconsume. Like, I fell victim to it when I was younger, but I grew out of it. Like, I used to spend all my money on clothes and shoes. So every pair of Jordans that came out, I was cashing out. Sometimes I'll buy them early and spend extra money on them. And I'm just like, how many pairs of shoes do you need for these 2 feet you got? You got one pair of feet and you got 200 pair of shoes. Like, make that make sense, man. I don't buy none of that crazy stuff. And people get it confused and think that I kind of uh restrict myself, or that the fact that I don't buy a lot of clothes and shoes, that I'm depriving myself of something. And that's not the case. I just know what's important to me. I don't
yeah,
deprive myself of anything. I damn near could buy anything I want when I want, but I don't want much and I don't need much, man. Like, my family's straight. I got food in the fridge. I got a house, roof over my head. My kids are good. I have a car. I have shoes. It's just, I got my essentials and my basics. Like, when it's time for me to have fun and enjoy my money, I do that. But everything's in moderation, man. I don't have FU money right now where I can just spend any and everything. But
yeah,
I got a tight rein on my personal finance situation.
yeah. That's good to hear. So I thought it was interesting to hear in some of your recent videos about the real estate stuff. Um, you bought a house, so that's awesome, right?
Yes,
Um, but you said you wanted to like continue with that, I guess. So what's your thought process with that at this point?
so that's super simple as well, man. On the real estate side, like I said, most millionaires and billionaires own real estate. And I learned that a while ago. So I'm like, man, when I get in a position to be able to afford more real estate, I'm going all in, right? I'm going all in. Like, if you're familiar with Grant Cardone, I'm not going that crazy. Like, I'm not going Grant I'm not going Grant Cardone crazy, but I'm gonna get as many doors as I need to bring in the amount of revenue that I want to generate, right? So I don't need 1,000 doors. I don't even need 100 doors. I need maybe 15 doors or less. And typically my strategy is I want to go the multifamily route. So 2 to 4 doors, 2 to 4 units. I want to find them in pretty much the crappiest conditions, man, so I can put that sweat equity in there and build up the value of it and either hold it or flip it. But it just depends on what makes sense for whatever market condition. So right now I'm looking in the South Shore. So I'm in Chicago, as I mentioned, but the South Shore area of Chicago is it's prime real estate, but people aren't really looking at it like that because it's kind of hood over there right now. It's real harsh. A lot of boarded up houses, a lot of it's just a lot of crime and a lot of couple crazy stuff going over there. But the lake is right there. Like, you have Lake Michigan right there. You have Lakeshore Drive right there. The Obama Library is coming over there, so you can see the shift happening. And that's where people miss out on, is they don't have the foresight to see, like, okay, yeah, it's hood over here, but give it another 8 to 10 years, it's not gonna look like that in 8 to 10 years, and my money will be over there. My money will be over there. I'll have significant amount of doors, and I'm gonna watch that tide turn. Like, I'm gonna be the reason that tide turns, because when things start changing, and frankly speaking, no pun intended, Frank, Frank, frankly speaking, it's a lot of black people over there. It's mostly black people in the South Shore, and it's low income, it's really impoverished and poor. And I'm like, man, y'all don't see the beauty in this neighborhood because they're stuck in the everyday struggle, right? Like, they don't have time to think. They just got to figure out where their next meal coming from, or where their next dollar is coming from. So they don't have time to focus on the potential beauty. But then it'll be outside investors, like people from Florida. Grant Cardone might come over here and buy something. And then the complaint about gentrification will happen, which is just really unfortunate, because they're like, man, they're kicking us out of our neighborhood, or they're moving us out. And it's hey, it's just what happens, man. Like, if you don't have money to invest, you can gentrify your own neighborhood. I think that's what people tend to forget. Like, it's gentrification isn't a negative word in my eyes. It's just beautifying the area around you, bringing the property value up, and just making it a better living for everybody else, man. So I plan on going over there, investing as much money as I can, buying as much doors as I can, and trying to keep it affordable, right? Not price gouging people, because a lot of landlords are out here gouging people like crazy. And you see it, the rents are skyrocketing right now. It's like a minimum, I think, of $2,000 at this point nationwide. And New York is even crazier. The East Coast, they're 3,500, 3,800 for like a 1 bedroom or a 2 bedroom. And it's sickening to me. So if I can get maybe 15 doors or less, that'll generate me anywhere between 5 to 6,000 per month. I can take that money and continue to roll it into the stock market, and go back and forth, and then reinvest it within my business as well, because that's another thing. So it's like, it's three legs, it's three prongs for me: stock market, real estate, business, repeat. That's it. And that's how I'm planning, man. But as far as the real estate, I don't plan on getting too knee deep in it. I don't like want to be a real estate mogul. I just know the importance of it. So I want to get as much as I need and just keep it there.
Okay. Where what are you trying to do to like learn about real estate? Where did you like acquire your knowledge of real estate, would you say, at this point? Because
Um,
at least for me, like, I think real estate is something that I'm potentially interested in, but it's not like something
it's yeah,
I
it's
definitely
not
want to do. And
yeah, it's not nothing that, like, send your hat flying, or like, you get bright eyed and bushy tailed about. But I learned about real estate initially through my dad. I heard about it. I wouldn't say I learned about it from him, but he would talk about it all the time growing up, because he had investor dreams. But he had a lot of kids early on, and he had to do the whole, everyday struggle thing, man. One job, two job, three jobs. He didn't have time to think about his dream when he got these kids to raise, right? So he would always say, man, I'm gonna buy me a building sometime. I'm gonna buy me a couple doors. And then he was saying how, like, location is everything. I learned about location being important, right? He hit me with the location. It's all about location. So I remember that as a kid. And then the older I got, I realized we were renting. So we never owned a house growing up. We were lifelong renters. And my dad still doesn't like own his personal home, but he's still a real estate investor. Like, he was able to invest as he got older. So like in his 50s, he's 65 now, but now he just rents because he don't care to own at this age, because there is a time and a place to rent versus own. Some people feel like renting is throwing your money away, but that's not the case. Sometimes people don't want a mortgage. Sometimes people rather have that flexibility of renting and being able to get up and go at their will. But ownership is that's something I'm really prideful about. Like, I care about ownership a lot. And the more educated, the better. So in 2016, I personally was renting in this neighborhood called Bucktown. So me, my girlfriend at the time, we were already on our well, we were on our second apartment at the time, and we're in the Bucktown neighborhood of Chicago, which is it's a lot of money over there. I'm not gonna lie, it's a little affluent now, and we were paying about 1,600 per month for a one bedroom, and I'm thinking to myself like, man, that's a little high for us. We can afford it, but it's it's still a struggle. Um, and that's when my landlord was like, man, I'm so glad you guys rented this unit out because my other tenant left, and you guys are a great fit. And I'm like, man, tenant, like tenants is cool, like we're basically paying his mortgage off. That's how I took it, which that's what we're doing by paying rent, like he's putting that towards his mortgage. And I started doing research, man. I'm like, fastest way to build wealth. I just googled that question, and of course real estate popped up, like the stock market and real estate popped up. So the fact that real estate popped up first, I deep dove into real estate, and that's when I came across Bigger Pockets. So are you familiar with Bigger Pockets?
I've heard of it, but I honestly haven't really like listened to it at
Man,
all.
it's a gem. It's such a great it's a podcast, but they also have a website. So on the Bigger
Okay.
Pockets website, they have the forum, so you can go in there and talk to any investor from a newbie all the way up to the Grant Cardone type, and they just share information. It's a free platform. Everybody shares what they're doing, what they're investing in, what their plans are for the future, what market they're in. They just share a lot of free information. And I was on there one day just eating it alive. And I got off the forums, went to the YouTube channel, started listening to interviews. And from there, I got bit, man, because that's when the idea of house hacking popped up. And they were talking about buy a duplex, live in one side and rent the other side out. And my head, like a light bulb went off. So I started going to RIA meetups, so real estate investor association meetups. I started talking with other people in my market. I just started learning as much as I could. And then I always said, the moment I get in a position where I'm able to buy, I'm about to go crazy. And that moment, that moment is now, man. So it took 6 years before I was ready to pull a trigger on anything, but I'm ready now.
Okay. So I guess another thing that's kind of seems like a hindrance to me is like I'm trying to invest, in the stock market, right? And then if you're trying to buy some sort of real estate, you got to save up for a down payment. And at least for me at this point, psychologically, that's like hard to, be setting that money aside. So do you kind of like set a certain amount aside every month or in order
So
to like save up for a down payment, or how did you save up
this
for a down payment, I guess, for your
this
current
this how
house?
this how I played it. So I just set a plan, and it's this the thing that people don't write stuff down, people don't strategize, people don't make goals and track them, right? So like smart goals. Um, I make the plan and I stick to it. So when I bought this house, I knew I would need a house, right? I knew how much I would need for a down payment. I knew what my credit score needed to be like. I knew what my work history needed to be like. So I worked on all these things in advance. I started my plan back in 2019, I think. December of 2019. That's when I sat down with my fiance and I was like, look, if we're gonna buy a house, because we were living in my mother-in-law's basement prior to this, and we were saving up. That was the whole goal. Move back home, save up your down payment for you can buy your own house. And from 2019, we sat down, we wrote it out. We like, look, we're gonna try to save up $20,000. Both of our credit scores need to be at least 700 or better. Like 680 is the sweet spot, but I don't want to give them any chances of like canceling us out. So let's both keep our credit on point. So I have a 780 right now. My wife has about a 778. Like we got all the credit we need. We don't need a better credit score. Like we can pretty much purchase anything with those scores. But we made sure our debt to income ratio was on point. So how lenders loan, you have to have, I think they go off of like a 38% debt to income ratio. So depending on how much debt you have, it has to balance out with how much money you make on a monthly basis. Otherwise, you're a liability to the bank. They won't loan you no money. So by me being completely debt free and making X amount of dollars, I look flawless on paper. And my wife was similar because she makes a crap ton of money, even though she has student loans. So it doesn't really matter that much. So with us two combined, they tried to put us in like some $1 million stuff. I'm like, cut it out, cut it out. So that's how we decided, man. We saved up to 20 grand and we started shopping, man. It took us 18 months, but we weren't in a rush to do so. We were putting about 800 a month into a high yield savings account as we were saving up. And then over time, as I noticed the market, going up, I'm like, all right, we got to put a little bit more here now, because otherwise we're going to be priced out. So we went from 800 to 1200, from 1200 to 1400 per month. And we just did that until we got to 20,000. That was our target. But nothing more, nothing less, man. You set that specific amount and you stick to it. If you have anything left over, do whatever you want with it. But with this 800 or with this 1400, that's solely for the down payment. And if you want what you say you want, you got to stick to it. And you got to stick to it. If you don't have enough money, you got to figure it out. I was getting super scrappy, man. I turned my hustle up. I started working overtime. I started doing side hustles. I started cutting back on my expenses even more, even though I was already living on 23% of my income. It's just, you have to really, like, when you say you want something, you have to stick to it, man. And a lot of people don't have that stick to itness, and
Yeah.
it's sad, and I get it. It's not in everybody, and I try to preach that, but that's the whole Q makes it happen thing. Like, if I'm going after something, I'm not gonna stop. Like, I'm not gonna stop until I get it, man. Whatever I'm going after, like, sometimes I'll fail, sometimes I'll stumble, but I don't care about that because I can get back up and try again.
Yeah, I think it's really interesting. Like a lot of people say like they want something, but um, I think you know the how much you want something is a lot more than just saying it. It's what you're actually going to do for it, and so you actually
Yeah.
have to show that that's actually what you want
That's a
and
fact,
put in
man.
the
You
effort.
can't just talk about it. Like, people big on affirmations or in these New Year's resolutions. I'm gonna do this. No, you're not. No, you're not, bro. I've seen you. You've been doing this the last 2 years. You say you're gonna do something, but it ain't no action behind it. Like, stop lying to yourself and stop lying to me for sure. Because again, it's exciting, it sounds good, and it's easier said than done. So people are just people, man. I try not to judge. I've
Yeah.
been there before, and you familiar with Eric Thomas,
No, I'm not.
E.T. the hip hop preacher? He's the guy, black guy, always yelling. He wears a hat. Thank God it's Monday. He has a saying or a viral video that says, "If you want to succeed as bad as you want to breathe, then you'll be successful." So when you want to succeed as bad as you want to breathe, you'll be successful. Like, how bad do you want to breathe? Have you ever had like shortness of breath? Or if you ever went swimming and damn near
Yeah.
drowned in the pool, the only thing you were thinking
Yeah.
about is getting above water and getting some fresh air and like being able to breathe again. That's how bad you gotta want being successful. That's how bad you gotta want to accomplish your goals. Because if you don't want it that bad, then it's just, I don't know what to tell you.
Yeah.
That's a bit extreme. Don't get me wrong. That's
Yeah.
that's a bit extreme, but it's just a mindset shift that you should have. Like, I'm
Yeah.
not that extreme. I'm not that intense, but I know what works for me and I stick to it. Like, with the time we do have here, you just have to take advantage of every minute. Like, for me getting on this call with you, I kid you not, I set an alarm on my phone. I'm like, interview with Frank. I was taking a nap and I was just like, you know what? I got to get up at 4:30 because I told my mans we're gonna have this conversation, we're gonna chop it up, and I'm a man of my word, bro. Like, I'm big, like, my word is everything. Like, what I do is one thing, what I say is one thing, but I try to stick to my word.
Yeah. I think that's important for sure.
Oh yeah. So tell me something about you, man. I want to hear a little bit more about you, man. This is getting insane. I'm tired of talking at this point. Like, how old are you? What are your investment plans? Like, what are your goals for the future? Like, what are your income looking like, if that's not too personal? What's Frank's situation, man?
Well, 20, so I'm in school right now,
Oh man.
um, studying computer engineering. So hopefully, hopefully that'll go somewhere. I mean, so far it's going all right, but obviously I'm not really making much money at this point. Making some, but um, I think right now I'm just kind of, um, I guess,
You're
developing a plan, trying to learn as much as I can. You know, I'm certainly investing. Most of my investments right now are in index funds, but I do have some like individual stocks, and that's, I guess, the individual stocks, dividend stocks, is where I spend most of my time. And I'm trying to, figure out if that's, a strategy or something that'll work for me. Um, and again, I think the real estate thing is something I'm interested in, on the peripherals. I said, like, this year I want to kind of try to learn a lot more about it and sort of not necessarily make a definitive decision about whether I want to get involved with that or not, but just have a better idea of it and sort of start to think through that process at least. Um, because for me, like, stuff like that takes time for sure, and especially like not making a whole lot of money at this point, it's going to take a while to save up
Yeah.
for something
So
like that. So
not to cut you off, man. I just want to say one thing, bro. You're 20 years old. You're 20 years old, and I can hear it because you're trying to figure it out. Everything in life from this point is going to be a constant figuring it out. Like I said, I'm 33 and I'm still figuring it out. I still don't know 100%. I have a little bit of clarity. Don't get me wrong, but
yeah,
everything takes time, bro. You're early, and I'm looking at you and I'm hearing about just the ideas you have. I wasn't thinking about none of that at 20. At 20 years old, I was dropping out of schools. I was chasing girls. I was like doing a bunch of dumb stuff, man, at 20 years old. And the track that you're on, I can tell you're going to be very successful. And if I ever need a loan, I'm going to reach out to you. I'll be like, yo, Frank, man, let me hold 100,000, man. I'm short. And you be like, here you go, Q, no problem.
yeah. Well, I guess that's something I do think about, is like the fact that I sort of am kind of focused on this stuff and not definitely not participating in as many like things that most young people participate in. And
Yeah.
um,
I look back on my 20 through on my 20s in general. Like I look back on my 20s and I don't regret any of it, but it's certain things I would have like, man, I would have did this different. Like I wouldn't have been so focused. Like at 20, all I cared about again was hanging out with my friends, playing basketball because I was very athletic. I played organized sports from third grade through college, chasing girls, buying cars, buying clothes, looking nice, and being just socially acceptable. And none of that did nothing for me. And it's like if I would have had the mindset you have when I was 20, I probably would have been retired and doing what I want to do already. So like you got a long trajectory from now to probably in the next 5 years. Like you, who knows where your career is going to progress? Engineering is a budding field. All my engineer friends make bank. All of them are super smart. All of them have deep networks, and they're just it's a specialized skill, right? A specialized knowledge, which is where the money is, man. So how long have you been in school?
about 2 years. So yeah, about 2 years and about half done. So
So you going for the
we'll see.
BA?
Yeah. So I'm at the University of Cincinnati, and their programs actually, like, their engineering programs, like 5 years, but I should be able to finish it in 4.
Mm,
And ideally, fingers crossed, that 4 will be a bachelor's and a master's. So we'll
eat,
see. We'll see if
eat,
we can get it
right?
all done.
Eat, man. That's oh god, dude. You got a plan. I know you got a plan. I think you're just either being modest or it's just like a humble thing to you because I could see you in the background like, oh, they don't even know what's about to happen. Wait till wait till I get this master's, man. It's gonna be over with. And again, I love that you're investing currently, which is important. So you're just doing the individual brokers right now.
So I have a Roth IRA as well, and Um, I've had some like 401ks at jobs that, most of my jobs so far have been like short term, like a few months. It's called like a co-op. It's sort of like an internship. Um, but fortunately, so far those have had 401ks, so I've contributed and gotten like a little bit of money in there. So
Do they have a match that they provide you so you contribute up to the
yeah,
match?
I think, yeah, at the previous job I was at, which I basically was with them for like 2, 3, or 4 month segments. It was like I contributed 4.5%, and then they matched 3%, and that was like the most they would match. So
Okay.
or
Man, that's dope.
I think I actually contributed 6%, and they contributed 4.5. It was something
Okay.
like that. Yeah,
Yeah. Get to it. That's something, man. And it's already compounding as we speak. That thing is
yeah,
the market was open today. That account is compounding. I believe it was a green day today. I haven't really checked
yeah,
the
just a
market
little bit.
all day today, but again, like you're stumbling through, you're early, you're 20, you're gonna figure this thing out, and your income is only gonna increase over time. So the stage you're at is the stage that a lot of young people get frustrated with, because when you're just fresh on the job market and you're trying to apply and get these jobs and people are turning you away, and it's like, I don't have enough experience. What do you mean? Like, I need the
Yeah,
experience in order to, like, bro, hire me. What do you talk? Give me the
yeah,
experience so I can have experience. You know what I'm saying? It's so frustrating, bro. And I've been there. Like, and it makes sense because I started working at 15 years old. And when I tell you, a lot of people wouldn't hire me because they know that I'm a liability. Like 15-year-olds, 16-year-olds, even 18, 19, 20, they fly by night, they're in the wind, they could just quit on the spot because they want to go take a trip to Mexico with their friends. Like, they don't have no responsibilities or obligations, so that's why a lot of companies
yeah,
tend to hire more secure, more older, more established individuals. So if you hire somebody who's got 2 kids and a mortgage, you know it's going to be tough for them to leave. They got to pay them bills, man. They got to feed them kids. So it's an interesting dynamic, but once you get in and get your feet wet and settled, you'll be good to go. You'll be good to go. But just, stay patient and be easy on yourself, man. Give yourself grace because it's up. You might not be able to see it right now, but you know, from my point of view, I see people like yourself, and I have a 21-year-old nephew, and it's just, I get excited, man. I get excited for you guys because the future is so bright, and like, you guys are the future. Like, we'll be in this future together, but where you at right now, you're doing great, man.
yeah. Thank you. I'm trying. I think it's definitely like for me, I sort of have sort of an outline of a plan, and I can see um, that I think it's going to work out, but it's always that like I want it just a little bit faster.
Yeah. Yeah. There's a little bit of anxiety there. And another thing about that is it's gonna change. So you may think you want
Yeah,
something right now, it's gonna constantly change. Bro, I can't tell you how many times I've tried different things and I thought I wanted to try this. Like, I had a mobile detailing business at one point and I was excited about it. I was like, man, I'm about to make so much money. I enjoy this. Like, I was working at a car wash before, so that's what gave me the idea to start my own business. And sure enough, I did it for 2 years, and I'm like, I don't know if I want to do this no more. It's like working outside and you're chasing people down. It's a lot of hard labor, hard work. And after that, I go to like eBay sales and flipping things online. Then that got old. And then, so your taste buds are gonna change a lot. So just be mindful of that and don't be ashamed to try different things, man. Like Gary Vee says this all the time. Just try a bunch of stuff. The
yeah,
younger you are, take as much risk as possible, try as many things as possible, because the older you get, the more obligations you have, and it's going to be a little bit more difficult to take those risks. Like, you mess around and get a girl pregnant, or you mess around and have these little attachments that versus taking those chances when you're younger, regardless of how much money you got.
yeah,
You got
yeah.
you.
Definitely, I agree. I think it's like a process of really learning what you want, and you kind of set some sort of goal or idea of what you want to do, and then you kind of work towards it, and along the way you kind of adjust where you're going, and It's
Yeah.
kind of like an iterative process over time.
Yeah. Lots of course correction. So let me ask you a question, man. If I was to give you all of my assets, all of my money, my house, my cars, my everything in exchange for your age, would you trade me?
What do you mean?
So if I could be 20 years old, I would purchase your 20 years of age for
Okay, okay.
for everything I have. Like, would you trade me for that? Does that sound like a fair trade?
I don't know if I would like.
Yeah, I got a house, bro. I got a brand new house. It's beautiful. I got 2 cars. I got hundreds of thousands of dollars in assets. I have 7 different banking accounts. I have multiple investment accounts. It's lit. It's lit over here, but I just want to be 20 years old again. Like, I'll give you this, what I have for your youth. Like, does that trade sound fair at all?
I mean, I wouldn't say it's not fair, but um,
It sounds trash. It sounds trash.
yeah. I
If I
mean,
was
like
you,
you
I would
said,
trade.
you want to be 20 years old again, but so do I. So,
Yeah, yeah. So yeah, take
which
advantage
I
of that
guess,
youth.
I guess, one of the things that I try to at least be like cautious about, I guess, is just like missing out on experiences. So, um, I
Yeah,
think that's something that I guess I need to just constantly or consciously remind myself of, and uh, try to take advantage of things when I can in the
yeah.
moment.
I agree with that. It's a interesting balance. It's something to tap into because I kid you not, like all of my life experiences is what shaped me to be who I am right now, and I'm grateful for them. Even the mistakes, even like the bumping my head and learning from everything is like I'm in a good position right now, and it's just I'm grateful for that versus trying to keep it super clean and super perfect. It's That works for some people, but it's definitely certain life lessons that you have to learn. Like, you don't always have to bump your head, of course, but you definitely got to get out there and I mean, you're in college right now, so I'm sure there's a lot of experiences going on. Like, you're meeting new people, you're learning new things,
Yeah.
you're building your network. I'm sure that the chicks on campus going crazy, man. I don't know, like college, I used to crash other college campuses just for like certain events for the girls, and I'm just like, golly, man, this I don't even go to school there. I'm all at U of I. I'm all down in Urbana, Champaign, talking about where the party at. Didn't even have the money to be doing that, but it's priceless memories.
Yeah, that's good. I'm glad you took advantage of that. Well, I don't want to take too much of your time.
Yeah. So I actually do got my wife just texted me. They on their way
Okay.
home, and soon as the kids get in here, it's daddy time. So I
Yeah,
gotta
that's
I,
fine.
I gotta turn on daddy mode. But this was great, man. I really enjoyed this, honestly. Like, I wish I could have asked you more questions. I'm sure we'll be in communication, but hopefully I was able to, serve your audience, give them as much value as possible. And I
Yeah.
don't know what you'll be doing with the video. Chop it up however you want, post it up, and just I'll be in the comments checking it out whenever you drop it. So keep me
All
posted.
right. Yeah. Yeah. I appreciate your time, and I guess we'll see everyone next time. Sure, there'll be a new video this Saturday to look forward to, and hopefully some other exciting guests on coming up. But yeah, this is a great conversation, and
Hey,
I'm glad you
blue
could come
collar
on.
Bill, man. Thank you for tuning in, man. I appreciate your comment too, because
Yeah.
I thoroughly enjoy this conversation, man. This is everything that I love talking about. Like, just everything I do is to help others. Like, I'm helping myself, but I put as much information out there as possible to help other people because it's a possibility, man. Like, my situation, you have to tune into my channel to check that out. But it was scarce. Like you said, you weren't making a lot of money right now. I was making 18 grand per year at 26 years old. Like, how are you supposed to live in like 26 making 18K? You're probably making way more than that right now, or even just a little bit above. But like, just keep that in mind and keep that perspective sharp, bro.
Yeah. That makes
All right,
sense.
I'm done. I'm done preaching to you, man. I'm sorry, man. I sound
Uh,
like a
no, you're good.
I sound like
No,
a dad. I sound like a
I
father.
I agree with Bill. It's good to hear your story, and anything you're sharing is interesting. I think so. I really appreciate that.
All right, appreciate it, man. I'll reach out to you on IG, but yeah.
Yep. All right. Thank you so much.
All right, Frank.